Okay, welcome everyone. We'll start our second lesson, lesson 2. In this lesson, we'll cover our LO2 learning outcome 2. My name is Anjum Satar and my email address anjum@ukversity.co.uk. Please, if you have any question, drop me email on my email address. So today lesson will go through LO2, which is about understanding the role of accounting and accounting record within an organization. So accounting record is very important. So you have to think about different types of businesses, such as, so business can be sole trader. So sole trader mean one person business. So partnership, two or more, up to 20. Limited company, it can be public limited, PLC, and it can be LTD, private limited, and public limited. Then other can be charities. All these organizations, everyone need to be keep the accounting record, which is a legal requirement by law. They have to keep the record to meet the requirement of a HMRC. To meet the requirement of HMRC, company house, if it's a company house, they have to submit the accounts, and stock exchange. Other can be stakeholders requirement. So all these purposes we must need to keep and measure the performance of companies, of businesses. So all we need to be keep the record keeping is very important in business to make various decisions. So today lesson will go through LO2. So before starting our lesson, we'll first recap what we learned during our previous lesson. So lesson 1. So during lesson 1, we discuss about the relationship between organization ownership and the nature of the financial reporting. So we discuss capital structure of different organizations, where we discuss sole trader, partnership, limited company. We discuss how many types of financial statement we prepare in accounts. We discuss about 4 types of financial statement we prepare in account during our lesson 1. Statement of financial position, statement of comprehensive income, statement of balance sheet. All this we learned. So we discuss all these: sole trader, partnership, limited company, different types of accounts, and we discuss about policies, procedures, cash flows, and auditor reports. All these reports we discussed during our previous lesson. So today lesson 2, we have an inductive content, what we supposed to be learn under learning outcome 2. So double entry bookkeeping, what is meant by always double entry means dual effect. So if you have a debit something, you have a credit something. You buy something, so you have a different 2 options to buy things. You want to buy a furniture, so furniture is increasing, which is our asset, and but if you're not paying the money, your liability also increasing. So debit your asset, credit your liability, which we'll go through today lessons as well. Posting transaction into ledger accounts. Yes, we can post transaction into ledger accounts, which will go through sale ledger, purchase ledger, how we can balancing our ledgers, and how we can interpret the balances, and we'll go through sale ledgers, purchase ledgers, nominal ledgers, and trial balance. All we'll discuss during this lesson. So we'll start. So today lesson we have 4 assessment criteria under learning outcome 2. So we have to explain the role of accounting and bookkeeping. We have to discuss about double entry bookkeeping technique. We have to use double entry bookkeeping to record transaction, and we have to prepare the trial balance. So that's all will be focused in our lesson today. So first of all, what command word we have, so we have 3 major command word to address these 4 assessment criteria explained: to give account of the purposes of the reason, apply and use, so put in operation are used, and report are prepared. Prepare detailed accounts are the statements which we need to, and we'll go through today lesson. So we'll go through. So please, before starting this lesson, just think about what you know about bookkeeping, how much you know about bookkeeping transaction. So bookkeeper is, and what is the difference between bookkeeper? Sometimes is a role, your job role can be a bookkeeper. So bookkeeper, if you're a bookkeeper, your role is to record the business transaction in the systematical ways in the books. In books, like we have a book, sale day books, sale day book, purchase day book, purchase day book, and we have a cash book. So if something is debit in the cash book, it will be credit in the sale day book, because you're selling things. Sales is your income which is coming, and then cash is coming when you're selling. So cash is your asset. So if you're a bookkeeper, you're supposed to be systematically record. So bookkeeper is a process of recording the business transaction into book of accounts. But if you're accountant, so if you're a bookkeeper, you're making all these ledgers and books and record up to the trial balance. So if you're a bookkeeper, you're preparing up to the trial balance. If you're accountant, you prepare the final account. So the term accounting is used to describe the process by which we provide the financial information data for the purpose of the decision making. So it's good to know how many types of financial statements we prepared. We discussed financial statement in lesson 1 as well. So financial statement, we have a statement of comprehensive income, which is also known, and also we call P&L, is mean profit and loss account. Second statement we call statement of financial position, which shows our assets, our liabilities, and our capital. Capital is mean investment. Sorry, I not mention you. In the profit and loss, we shows income and expenses only. Okay. The third type of the statement, this statement also known as balance sheet. Statement of financial position, also known as balance sheet. So no need to be too much, it's sometimes a confusion. What I'm saying, statement of financial position, and you see in the company statement is a balance sheet. So then statement of cash flow. So it shows cash inflow and outflow, and we prepare 3 activities. Operating activities, you can find any company statement, investing, and financing activities, which is showing in the. So operating mean our normal business, investing mean you have a spare cash, you invest in different types of assets, and financing, you raise the cash to borrow or the money from the different financial institution, like a bank, like the various lenders. And then the statement of change in equity, statement of change in equity. Equity mean the shares, how many shares we have issued. So shareholders statement as well. It shows shares. It shows return profit. Return profit mean previous year. It shows the how much dividend we paid. Number of shares being issued. So this and total is known as equity, and in companies we call equity, but sole trader we called capital. So it's the same thing, just different terminologies. Thus we need to know. So if you're accountant, your purpose to prepare these statements, and that statements used by the various stakeholders, they make the decision. The process is known as accounting. Several function identifying. So accountant identify, they classify and record the transaction. So they identify how much is worth of asset, how much worth of liability, how much worth of, they record, and then reporting the business transaction, they analyze and interpret the data. Yes, we interpret the data in terms of, how much is the profit, how much loss, how much what's happened last year, this year. So if you're a bookkeeper, you record. So sole trader would use the single entry system. Sole trader would use the single entry, where the larger business would use more complex double entry. Usually the few businesses use manual bookkeeping, but most of we use the software to record the transaction, but most of the business use double entry now instead of just single entry. Just in the military we use normally, in the government organization, single entry, which we just giving one where the cash we're not telling for what purposes we spend the cash, because due to the some security, which equipment we bought is arms or things, so we don't need to be tell people in our statement. So bookkeeping is the art of accounting. So bookkeeping and accounting is work side by side, So accounting process is recording, classifying. So if you're a bookkeeper, you're just recording. If you're accountant, you're recording, classifying, summarizing, reporting, and interpreting your role as a accountant, and bookkeeper is just recording. So different, bookkeeping is more recording of business transaction. Accounting denote not only recording the business transaction but also analyzing, recording, leading to preparation to the final account. Accounting began where the bookkeeping ends, where the bookkeeping and accounting start. So accountant role is wider than the bookkeeper. The process of accounting, if you have a ATHE or CAT basic qualification, so less than level 4, so you normally call bookkeeper, qualified bookkeeper. If you have a level 4 qualification, you can call yourself as accountant, so but we need a good, like lot of professional qualifications, which is purely, and this one is also accounting qualifications as well: AT, SEMA, ACCA, and some financial and management accountant as well, so which we'll go through in the following lesson. So accounting is a concern with the financial information with the bookkeeping system. The books of account provide the information related what business own, how much worth of asset, how much worth of the liability. But the main role of the bookkeeper to prepare the document, issued account, checking the documents, and we'll go through in the next slide, what type of document I'm talking about: sale invoices and different sort of, purchase order, for those sort of documents. So into accounts and making, recording payments and all these, in a systematical ways, and we have to keep the record 6 year plus current year, so 7 year we have to keep the accounting record. Okay, next now accounting concepts. So bookkeeper and accountant are required to work within the set rules. Set rules is the double entry bookkeeping rule. So the reasons for this is provide the readers assurance that the information represents. So if you're accountant or bookkeeper, really we need to provide two information need to be true and fair, so match with the reality, not mislead the people. Are putting more expense instead of to show my profit less, or show my sales more. So this is, maybe couple of you heard about creative accounting, so people can under or overestimate, so we lot of companies, they just put the fake sales, to boost the profit, because the profit not mean the cash itself. Profit can be, it's a credit sales. I'm selling now, maybe I'll get the cash in 2-3 years time. So that's all about. Okay. So we need to be make sure is it true. And the business entity mean organization, require the bookkeeper and accountant treat businesses as tough is independent unit. This means that each business street should be living person and own identity. So that's my business entity mean own names, own legal, and own report. So the concept mean the books of accounts to be kept with the name and the traders and the financial statement. So we need to be make sure we'll prepare all, so we should keep ourselves and the business separate as an entity. So if you even a sole trader partnership, whatever, you and business should be keep it, don't mix it. So that's we need to be. Next we're looking now we're looking different types of documents. So in accounts we have a different types of documents we prepare. So list of documents. So let's think about the process. The if you want to buy something, you inquire from the seller. Seller send you the quotation, and then you raise the purchase order you want to purchase. Then they acknowledge the order. Then they send you advice notes. Then they send you the delivery note. Then they send you the uh, invoice you received after you have to make the payment is a debit note and the credit note. Sometimes you return the good, you make the already payment, and they send you the credit note, which can be adjusted is in future statement. So then the statement of accounts, how much you owe it or they owe to you. So and then we can pay and remittance invoice. So this is the process, and the bookkeeper have to record it. So what my purchase order, what the goods been, I need to be at match with the delivery note, and I need to count the goods they send me, they post me, they deliver me. Those are appropriate and is according to the part numbers or the specification whatever we requested. Okay, next now 2.2, explain double entry bookkeeping. So double entry mean dual effect. So dual effect. So purpose of accounting system to ensure that transactions are correctly recorded, gathered together for the period in order to prepare the financial statement. So you need to be ensure the business can be keep the record of all the assets and activities to facilitate the measurement of the business performance, to help the financial and other form of credit to meet the legal requirement. Statutory requirement is mean legal requirement. So the accounting system start with the transaction. So like think about you purchase furniture worth of £100. That will start, uh ABC Limited started business, yes, and you started business by investing £1,000 in your own company. So what we'll do, £1,000 cash is coming in the business. So we'll do debit your £1,000, and we'll use the word DR to debit, and we'll use CR is credit. That's your capital in the business, which is also £1,000. So 1,000 debit, 1,000 credit. What's happened the later date? We purchase the furniture. Furniture is all furniture. So you purchase worth of, let's say, £400. So we'll do £400 debit or furniture, and we'll do credit because of course your cash is going down by £400, and we will do credit. So which will go through these, that's a systematically we need to be record. So now your capital will stay the same because it's 1,000 still doesn't matter because either your assets always equal to your capital. Okay, so transactions, we have then primary document, book of primary entry, and ledgers. These are can be cash is a one ledger. So that's debit, that's credit. So my net cash is now is a 600 because 1,000 was, so my debit and credit is a minus now, and now my 600 cash balance is, and that's my ledgers. In cash ledgers my 600 will go in the trial balance, which will go through and I'll explain you further. Okay, now then these are transaction: cash sales, credit sales, sale return. These are all transactions. Primary document is sale invoice, credit note. These are primary document. Book of prime entry, we have a separate book to record the transaction, like sale transaction in the sale day book, purchase transaction in the purchase day book, sale return, and the cash when we receive will record. And these are called book of prime entry. Other called journal ledgers. Journal ledgers is mean sales ledgers control. It mean you maybe heard the terminology is called debtors. It mean trade receivables. So if we have a bad debts, it all due to the because So if I'll say I have to receive 500 pound, we sold the goods. So 500 I have to receive is debit, which is my asset, and I'll do credit my sales, which is my income, 500 pound in credit. Yes, what the later dates, and this is called, so this is the book of Parliamentary, but this is the journal ledgers. So we call journal ledgers. Okay, next now. Okay, we need to remember dual effect. So every transaction has two effects, either debit and credit. So which we'll go through accounting equations. So assets. So assets is debit. Liability is credit. And if I'll say to you, let's say you bought a house. Let's say you bought a house of 100,000. 50,000 you paid in cash. So 50,000 is still we owe it. So 100 minus 50. So your net capital in a house is 50,000. So that's your 50,000 will be your so 50,000 your net asset, and net asset equal to, we call, if you minus it, is become net asset, and the net asset figure is a 500. So 50,000 and is equal to 50,000, So that's the way we can calculate if we need to be accounting equation. Debit side should be equal to my credit side. So my debit side is this and my credit side is this. So that's mean debit and credit, which we'll go through the next slide. Okay, to remember it, we use the word debt click, guys. Please, you just need to remember to understand the double entry. So D-E-A-D, debt, and click. So we use the word debt click. So D stand for debit, E stand for expense, A stand for asset, and D stand for drawing. Drawing means anything you draw. So when increase these things we do debit, when decrease we do opposite. Debit is a credit. So credit side, when increase my liability I do credit. You borrow more money, it means you owe more. Income, if you sell more goods, and it means you have more income. Capital, if you put more money in the business, it means you have more capital in the business. So when is decrease we do debit, when is increase we do credit. So that's the way we need to remember the debt click, what goes on the debit side, what goes on the credit side. So this I put it one further slide. So asset mean anything you own it, anything has economics value, property, plant, equipment, cash, receivable, these are all my asset. And liability, when asset increase, when your cash increase, you do debit. When your cash decrease, your balance of the cash, you do credit in your books. And liability mean anything you owe it is a legal obligation. By law we have to, normally is a credit. So asset is a debit, and the liability, like you bought a furniture, is the debit. Liability we bought from let's say different uh, different furniture shops, for suppose Oman furnitures or various other furniture. So we can credit our that person as a supplier because we have to pay them. So in later date when we'll pay, we'll do the debit our liability because we reduce our liabilities, and we'll do credit our cash because we will decrease our cash. So that's the way we need to look around. So please, you need to be follow the rules. So income increase we do credit, when decrease, when expense increase we do debit, when expense decrease we do. So equity, when you have more investment in the business, it means credit. When you draw something for personal use, you do debit. So that's the drawing. Okay, I copied the link for you to do what you can do. Please copy this link and just watch this video, and it's quite good to be improved. So let's quickly we can watch. It's quite good too, and we can dwell further understanding about. So this is the video.
When we post transactions to the accounts, we sort the accounts into categories to enable us to compile the statements of profit and loss and the statements of financial position. Depending on the type of organisation,
So please, it's quite good to watch. So that will help you to further to develop your understanding, and you can pick things from there as well. Okay, then accounting equation mean my assets. This is all goes in the statement of financial position. So my asset is worth of 1,000. I don't have a liability, so sorry, 10,000. So my 10,000 minus my liability is zero. Is my net asset is 10,000. My net asset always equal to capital, which is 10,000. So my business capital in the business we have is a 10,000, and my asset is 10,000. So when the asset value decrease, your capital actually decrease as well. So we need to look around the preparation of the trial balance, as we earlier said and we discussed. So trial balance is prepared by the bookkeeper. If you're a bookkeeper, you prepare the trial balance. So we prepare the ledgers, and all the ledger balances we need to be balanced. Oh, sorry. I think so. I missed, this slide. So we need to go through 2.3 instead of 2.4. So 2.3 is is all about the double entry bookkeeping. So you will see there what we did. We bought a motor vehicle. I'll upload, the slide for you further. So we'll help you. So we're using that click concept. Motor vehicle is my asset. So I bought mean, yes, we purchase it. So you purchase £10,000 worth of asset. So we do debit our asset, we do £10,000 credit our cash because we use the cash to purchase our asset. Then creditors mean is suppliers. We paid creditors 1,000 by check. So we owe them, we bought something in the past by credit, so we owe them. So we did debit. P lake is why supply. We are reducing our liability, and we're reducing our asset, which was the cash, because we paid it. Reporting loan, we bought a loan is a liability. So repaid, sorry, we bought the loan in the past. We borrow the money as a loan from the P login, and we now paying it. So loan is a liability. When liability increase, we do credit. When liability decrease, we do debit. So debit the loan as the P logins. We have to pay. We paid it 2,000, and now my cash decrease. Sold motor vehicle. Now we sold the motor vehicle. So when we sold by cash is increasing debit, and motor vehicle is credit. So that please keep in mind the double entry bookkeeping rule, and just follow it, and that will help you as well. So in this way, we can go through and we discuss. So please, I'll upload further slides for you as well to double entry bookkeeping, so you can do practice. Okay. So sale ledger control and the purchase ledger control, what we need to look around now. So transactions, we need to look around sale ledger control purchase. So sale ledger is the debtor. So when we have a sale ledgers control increase, which is a general ledger, we do debit, and the sales we do credit. When is the sale return? So sale is opposite. So sales is increase. When sale decrease, we do debit. And the sale ledger control, because they return us goods, so we not going to receive the money in future, so we're reducing our receivable. Cash, when we receive the cash, we do debit our cash and credit our sale ledger control. But the purchase will be opposite. So when we do the purchase account will be debit, and the purchase ledger control, which is our liability, will be credit. When we receive the money or return the goods, they will return the goods. So we'll do purchase ledger control because we're reducing our liability, and purchase return we do credit. Purchase ledger control account, when uh, we make them payment, so liability will go down and my cash balance will go down as well, and vice versa. So that's the way we need to trade the transaction. So you will see there, this is one of balancing the ledgers. So we need to look around. So we have a bank. Jack injected capital 10,000 in the business. So 10,000 is my debit as a cash, and 10,000 is credit. So description we always cross them. So why my bank is debit is 10,000 by due to the capital, and 10,000 capital is credit due to the bank, or we call cash, cash in hand or cash. So that's my debit and that's my credit. So then the later dates, what's happened? We bought a machinery worth of 4,000, which is a non-current asset, the asset which we can use long period of time. So 4,000 is my debit in bank, cross reference because my bank is a credit. So my cash went down by 4,000. So 4,000 and 4,000. So now my balancing figure here will be 4,000 debit and credit side. There is a 4 and the balancing figure will be 6,000 and there will be 10,000. My and balancing is mean closing balance. Huh? So when we look on the next note, you will see there I'm looking the bank. So my balancing figure is a 6,000. This period is a closing balance, next period will be opening balance, and then we'll carry on. So 10,000, 10,000 is a closing, and then is balance brought down, will be, there should be a BD. Yes, balance carry down, balance brought down, BD. Yeah? So they put the wrong word there, BD should be. Okay, next now I'm using, okay, so next now balance brought down. So you will see there bank is 4,000, and now this is my non-current asset balance 4,000. So this should be CD. CD means carry down. Yes, balance 4,000. Here should be BD, balance brought down, and both sides will be equal. Okay, and these balances, when I'm preparing the trial balance, I can transfer into the trial balance. So I can write bank, and I write the balance is 4,000 on the debit side in the trial balance. Then I write the capital 4,000 is on the credit side. So I can show you here. So let's will make the trial balance. Trial balance have two sides. So we call debit and we call credit. So we can write the bank and we need to write the description as well. So here we can write bank, and bank we have balance now 6,000. Then we have capital balances 10,000, and we write then machinery, which is non-current asset, which is machinery. We have the asset which we can use more than a year. So how much is it? So that's my debit side is 4,000. So you will see now my trial balance should be both sides equal. My debit side is 10,000 and my credit side is 10,000. And this way we can balance our trial balance. So that's all, this one is trial balance. Okay, so that's we use the accounting equation. By 10,000 we have asset, 10,000 we have a capital. Okay, next now we look 2.4. 2.4 is assessment criteria, and we need to be prepare balance from trial balance from these. So at the end of the accounting period, each general ledgers, like we discussed bank, non-current asset, and all, we need to be balanced into, and initially balances are collected in the trial balance. If the double entry is correct, the debit balance and the total credit balance should be equal. So we have this sale ledger control account balance, which is mean our debtors are receivable is total balance is 2,000. So that's 2,000 is my debit side, the money we have to receive, and this is my trial balance. Is sales always goes on the credit side, purchase is always on the debit side. Sale ledger mean is my receivable, that's my debit side. Purchase ledger is on the credit side. Bank is asset, debit side. Capital is credit side. Liability is credit side. Loan is a liability. Rent is expense, debit side. So you have to use the word that click, easily to recognize it. My debit side, you will see there is equal to credit side. Okay, then we have a question here. So guys, let's see, you can start as well. So capital, so use the word debt click. So use the word, write down the word, go back to write down the word debt click. Yes, what goes on the debit? Debit, expense, asset, drawing, credit side, liabilities, income, and capital. So now we'll go back to our, and we need to prepare. So capital is on credit side. Cash at bank is asset, is debit side. Furniture is asset on the debit side. Purchase ledger control account mean creditors is a liability on the credit side. VAT owing to, not owing from, because sometimes VAT is a refund, we have to pay the VAT, so that's a liability, that's credit side. Cash sales, sales is the income that goes on the credit side. Purchase is on the debit side, which is treated as extra, and we've been given some extra information which I'm including in my answers as well. So you will see there now, that's all, and this all was the given adjustment entries end of the year. So that was provided here. That's so expensive goes, and the debit side interest received is income that goes on there. So my debit side is equal to credit side. So that's the way we need to be balance our ledgers, and we have to prepare. So my job, if I'm a bookkeeper, to prepare up to there. If I'm an accountant, I prepare my final account statement of profit and loss, statement of balance sheet, and statement of cash flows, and the statement of change in equity if I'm a limited company. Okay, then I copied the guys. Please, it's good to be go through and practice if you're, and just copy this and go through, and even you do wrong, but at the end, it shows you the answers as well. So what you can do, copy this link and just go through. This is the invoices, like how many quantity there, what the unit price, what the code, and say there if I'm right and wrong. It's telling you, yes, if I'm picking this is, so I'll say you I'm right or wrong. Yes, statement of account. So you carry on doing. If you not understand anything, please, at the end it shows you all the answers as well, but here you can find I'm right and wrong. So it's quite good to be do practice, and that will help you to further enhance your understanding. So that's all today lesson. So today lesson we learn about the double entry bookkeeping. What I'll do, I'll request to Raman to upload this handout for you. Is called double entry bookkeeping. So all the entries will be there, and two handout, question bank and answers bank, that will be available on Moodle as well. If you have any question, drop me email. I'll get back to you as soon as possible. Thanks for listening, and those attended, please, if you have any question, drop me email and try to attend next session. In next session, we'll go through LO3 and learning outcome 3. In the meanwhile, if you have any question, drop me email on my email address. Thanks for listening and attending. Thank you. Bye bye.